So if you understood spreadsheets, you might say like, I love it, it's great. I can just put a formula in there and I can use it and use it and use it. Other people like, there's only a few questions here. You absolutely could just do these questions on a calculator. But I see on page 20 that Mariah's sister's annual income is $6,500. And so her maximum debt, right, it's supposed to be 20% of her annual net income. So I'm going to use a formula so that I can drag the formula down. So since it's a formula, I'm going to type equal. Try to make this a little bigger so you can see what I'm doing, maybe. So I'm going to type equal, and then where does the income live? The income lives in column B, and we are in row 2, so I'm going to say equal B2 times 0.20, because it says 20%, or we could have put times 20%, but the 0.20 is actually already in the book, and then that's it for that one. Now, it might have seemed like, well, just go ahead and type in 6,500, but now we can go to that bottom corner and drag it down so that when we put other things in, then we'll, and the reason you don't see the 0 for this is because my box is really big there. And then for the maximum monthly payments, that one we're taking, so we're taking, since it's monthly, we need to, again, make a formula. The annual income is in B2. I'm going to divide that by 12 because that would give me monthly. And then it says that it's...
Where is this spreadsheet at? I cannot find it.
It's not.
Oh, okay.
It's not. I just made it during lunch.
Okay.
So, yeah, it's okay. And then, oops, I'm just going to let her borrow 10 times as much as she has. So then her maximum payments, and if you look in the book, you're going to see that it says $54.17, because this is just repeating. I'm going to put money on this so that it knows. And hold on just a second, and I will, even though this isn't something, this is going to confuse the heck out of people. It'll probably be the one thing they do, because, you know, but so that you guys can access it if you want. Bum, bum, bum. I will add it in classwork, create, and I'll just say it is material. No limit. Oh, hello. Type, add, file. Insert, and I guess I can't do it that way. I can't say it's material. If I'd say it's material, then it doesn't let me make everybody be able to type in it. Okay, so create, I'll say assignment. Right. File. Insert. Also, this is not something that you're going to have to turn in, but for instance, if you had to do this on the test, you could use this to do it, although you could probably just use a calculator for that matter. But if you had to do lots of them, it would be faster to have the spreadsheet. If you were just doing a couple, probably just as easy to put it in the calculator. All right, sign. All right, guys, if you refresh now, you should, maybe, it says assigning, I think it's created. So if you might have to refresh your Google Classroom page. And then I believe the things that I currently have in there will already be in there. The changes that I make after now won't be in there. But you could practice that way.
Yep, everything's in there.
Awesome. So Jesse's brother, it tells us in the book, so I'm getting the basic information from the book. So $24,750. And so then once I put that in there, since I've already drug that formula down, now I didn't drag down how much his maximum monthly payments could be. So if I drag that down, so one of these numbers, and by the way, if you've not used spreadsheets before, you have a couple choices. Like when I can't read everything at the top, you can go between these two columns. And this is just a little detail, like not something you need to like worry about, but it's something I'll do. And I was just gonna do it, but I thought I could tell you what I'm doing. You can move this over to make that bigger. What I did yesterday was I left them because I didn't want it to like go way off the page. So yesterday I left them fairly small, but then for this first row, let's see, because I've got mine maximized so much. You see this little thing, it says text wrapping. So it's like, there's your horizontal, or like to if you want it centered. And then this tells me it'll either let it go like overflow, that's the normal, or if I take this one that says wrap, and then it makes it go like that, so that it just makes that header line bigger. And then if I was trying to make this easy to read, I could like highlight that line, I could make it bold, I could put some shading on there, I could make it as fancy as I want to make it. Those are the kinds of things we would play with a little more and kind of get to use if we actually, it was just a computer applications class. And so Jesse's sister in the book, I see that one says $35,800. Oh, and my number lock is apparently not on. I'm typing somewhere, 35,800. And then if you have an annual net income, you want to, like actually, again, you're not turning this into me, or you'd like to dream like, okay, when I get finished with college and I'm doing this, it said I'm going to make $90,000 a year. Now, it also says net income. So you're going to lose about 30% of that to taxes. The higher money you make, the higher percentage of taxes they're going to end up taking out. But so like if I just invent something, just so for the record, I am not making nearly this much. So, and then if you type that in, then you'll see that, okay, then I should not have any more than $15,000 worth of debt. And my monthly payments on that debt should not be more than $625. This does not include mortgage. All right. So mortgage is a whole separate thing. I think usually when you are looking for a mortgage, if I recall correctly, I think that they say about 30%. So that's a big chunk, right? About 30% for your mortgage. And then if you think about just housing in general, you're probably a lot of people are paying 50% or more. 50% is kind of supposed to be like a comfortable number, or like an average, I guess. But that would include not just mortgage or rent, that would also include utilities, property taxes, those kind of things. So, but the reason that I did have us practice this, one, because I think it may come up on the test, but also because the assignment that I am giving you today has to do with looking at some credit applications and seeing it, and then deciding like, would I okay this, or would I not okay this? And so like they tell you, this is how much the person's making. We'll assume it's net income. It's not exactly labeled very clearly, but we'll make that assumption. And it already tells you like how much other debt do they have. And so then you could figure out, would this put them over the 20%? because remember the maximum total debt? Or would their, you know, like, does it look like their monthly payment? Like, man, they already have a lot of other things. And even like the rent or mortgage isn't included in that part. Like if it's really high, you know, they have to spend that money. So, and that comes back to like part of the capacity to pay, which is in back in that slideshow. So what we just did in the slideshow was just going over that part. Oh, please, I don't need all that up there. So again, this is in the book on the next page on 21. So kind of goes with that stop, drop, and think before you buy kind of thing. But if you're going to borrow, man, it really needs to be a need, or like you really want it. Are you still going to be happy about it when you have to pay for it? I think I mentioned in the recording that I made, when I was in college, before I had my son, I had a chance to do a study abroad program, and I lived in Europe for 11 weeks. And I borrowed some money for that. I borrowed the money that basically covered the airfare and the additional expenses beyond what I normally would have at college. And even though times were really hard when I had to start paying back student loans, that was money I really didn't regret, because it was like a once in a lifetime experience, especially once I had a child. Like I couldn't just go live in Europe for 3 months or 2.5 months. And I made some really good friends, had some cool experiences. And so I didn't mind. So I was happy to pay that. There were some like clothing and like going out to eat with friends. When I got those credit card bills, I wasn't necessarily so happy about that. I was like, oh my gosh, what did I do? And so we want to be asking, is there room in our spending plan to pay this back? Because eventually we have to pay it back. We've got to make these payments. And after I add on the extra cost from borrowing, like how much is that going to be? Like how much interest am I going to end up paying? And is the item worth the price plus the extra? And then what's the cost of waiting? Could I just wait until I could save the money? Now, something like a house, probably not. College tuition, again, probably not. Like we want to be able to have more earning years left to put that education to use. So it would be hard to wait until you had all of it saved up. The house would be crazy hard. And then discipline, like asking yourself, like, am I going to be self-disciplined enough to pay this back and not want to just keep spending more? Because we get into some trouble there, of course. And then we want to make sure that we protect our credit rating. And if you're older, like me, like you've had a chance to already build a reputation. If you're younger, sometimes it can be hard to get started. But at the last of this, we'll kind of talk about what are some things like no one will even loan me money. How am I going to build credit? Like some things to try to get started with that. So when you apply for credit, they are going to be all up in your business. They're going to want to know, oh, get out of that. I can't make this stay away. They're going to want to know all those things. They're going to want to know, of course, your name, your address. They're going to want to know your social security number, your employer, how much money do you make, what's your bank account, not just the name, but like what's your account number, because they're going to want to check all those things to see if you can pay things back. Do you have a mortgage payment? Do you have a rent payment? So then this is just given as example. We did not make up a social security number. And notice there, a lot of times they'll not only ask for your monthly income, they'll ask how long you've been at a job, so that they can establish like how stable that employment is. So this person, if she was asking for a loan, well, I guess it depends on how much. Oh, I just want you to go away, little jobber. No. So that person had some capital. She has a savings account. That would be the capital. And these 5 C's of credit are on, oh, just go. The 5 C's of credit are also in your book. Lots of things in the book. I think they're in the book not until page 24 and 25. So capital, as in, do you have some money already in the bank? Like, if you don't have any money in the bank, I know it might seem like, well, I wouldn't need to borrow if I had some, but they want to know you have some because you got to pay your normal bills. So having a savings account, a checking account, having some money in the bank is going to be helpful, especially if you haven't really established your credit character because you haven't been given the opportunity to borrow. If you have like bank accounts and they've been stable and you're not overdrawing that checking account, things like that, that can help to build your credit. And so that goes under capital, and it kind of goes under the character part too. And capacity, you know, it's kind of like the person who asks you to, if they ask you to borrow money, borrow, you might as well just ask me for a gift because you ain't got no money to pay me back. So people who don't know us aren't just going to give us a handout, right? So they want to know that you have the capacity. So making sure that there's steady employment, and that your income is sufficient. And then that's where that whole, like, for instance, the 20% rule of like, if I look at their total, like what else they owe, is this going to put them over that 20%? Because then they may not have the capacity to pay it back. Character, so that's like, are you paying things back? Are you paying things on time? And that could include things like your utility bills. So even if you haven't had like a credit card, could be utility bills. You're not overdrawing your checking account, those kind of things. And then collateral, again, and thinking about different kinds of loans and the percentage rates. If you are trying to borrow money for a car compared to just getting a personal loan, you're going to get the car loan for a lower percentage because there's less risk. Because if you don't pay for the car, they're going to come repossess it. And then they could resell it. You don't pay the loan that you just used for whatever, that you didn't have to tell them exactly what it's for. They can't repossess your education. They can't repossess money that you spent on like consolidating credit cards. They can't repossess that. There's no collateral. Or in the case of a house, we call that a mortgage. And they would, instead of repossessing, we call it foreclosure. So foreclosure, repossessing, really the same thing. Foreclosure just basically means it's a house instead of some other piece of tangible property. And so if you have collateral, it's less risky for them. So with a credit card, there's not specific things that they can just come back and take from you. And so that's also why credit cards have higher percentage rates. And then conditions, like sometimes there are things that happen. There are some things you can have documented with the major reporting agencies. Or so like in this time period with COVID, there are going to be people who, of no fault of their own, may have lost a job or had to take a job paying less or couldn't work as much because they're home taking care of their children or a parent or something else. And that might affect like how they're paying their bills. Maybe they're not on time. So they may want something added to explain that or explain it to an individual lender to say, hey, this was the conditions, this is what happened. Obviously, it's best if you don't have to worry about explaining things away, but that is something that is considered. So when you look at that assignment, it's I titled it credit worthy. Maybe. Let's see if that's gonna allow me to drag it over here. Maybe not while I'm sharing. But when you decide to approve or deny the credit application, you don't necessarily have information about every one of these things. But like, how much do they have a bank account? That's going to go into that capital. Capacity, how much money are they earning? What's their income? Are they, how much do they want to borrow? Would that, with their current debts, put them beyond that 20% that they should be borrowing? We don't get the full credit report on the application, so we may not know things about the character. How long have they been at their job, if that's included? Is this like for a car? So I would have collateral, those kind of things. So when you decide approve or deny, as far as the reasons, you could say not enough capacity, their income's too low, or this would put them over the 20%. Or they don't, like they're already spending over half their money for their rent. They won't have enough, that. So you're going to give 3 reasons on each one. Some of them can be pretty straight, like they might sound like you're just rewording the same thing. Like basically, I don't think they got enough money, but kind of this is why, because they already have a lot of debt. They don't make very much money. And that, this would put them over 20%. So you could be like wording the same thing kind of in 3 different ways, because some of these things go so hand in hand. But each one, you should have 3 reasons for why you're either approving or denying. And I think if I remember right, there are 4 applications. I'll look at those in a minute, because it doesn't want to let me drag that over here right now. All right, so then who is watching? And I tried to look to see, because I did see a question that had one of these specific names of places on the test, but it might be in the last lesson. But I wasn't seeing these names of credit reporting agencies in our booklet, but I did see at least some of that on the test. So of course, on the review, that's always my time to make sure that if there's something I don't feel like we covered, if I look at it and think, whoa, when did we talk about this? I will be sure to give you a heads up. But Equifax, Experian, TransUnion, those are your major credit reporting agencies. And then your people you have credit cards through, lenders, banks, landlords, employers, insurance companies. Like your insurance rating and how much you end up paying for your insurance, it also looks at your credit rating. And so it not only affects, can you get a credit card, can you get a loan? It could be, if your credit sucks, that your insurance rates are also higher. So it's also a reason that we want to keep track of what's on our credit report to make sure there's not mistakes on there. So when you're just starting out, if you don't have, it can be hard to get started. It's kind of like getting a job. It's hard to get a job in a certain field when you don't have, they want someone with experience, but you can't get experience because you can't get hired. And so if you can show that you've had steady employment, having a checking account and using it responsibly, making sure you're not overdrawn, having money in the bank, checking account and savings account look even better. And then also there's that's kind of twofold. One, it shows that you have some, the steady employment is your capacity. But it shows that you have some capital because you have money in the bank. But also it helps you establish that relationship with a bank or credit union. So if you've had money in their bank for a couple years, that specific bank may be more likely, in most cases, to then take a chance on giving you a loan than some other bank. Because even though they all report things, you've already had a relationship. You could also set things up like auto pay, and they're even more likely to extend credit if you have it set up on auto pay. Or if you have direct deposit of your paycheck, they're like, all right, your paycheck is coming straight here every month or every 2 weeks or whatever, and you're willing to let me take our payment straight out. That doesn't seem nearly as risky as someone who, hey, your money's in some other bank, and I don't know what you just go cash your paycheck and maybe put money in the bank. I don't know. And then you have to write us a check and mail it to us, or you have to get online and do something. It would be easier, even if people had the money, to forget. So having an account and being willing to like link that to the loan sometimes will get you either a loan when you couldn't get one somewhere else, or maybe a better rate. And then I kind of feel like the asking someone else to co-sign is kind of a last resort, because most people, and let's think about it, like you don't want to put yourself in that position, and you don't want to really ask someone to put themselves in that position, because now they're legally responsible if you don't show up for it. So, maybe parents would do that for their children. But even that, it's just it's a big risk, and it's a big ask for someone to ask them to co-sign. I would say there's probably been some families split because of things like that, of I co-signed on this loan, and then co-signed on a loan for your brother, and then the sister's mad because the brother didn't pay, and etc. We're not doing this. That's it. Yeah, I thought we were at the end. So you guys probably already opened it to see what it looks like. Come on over. Oh, I guess I have to open it first. What am I thinking? And I don't think that I'll probably have to worry about either of my people in class right now, but for others, I want to make sure when I say think about these, like I tried to decide and give reasons and complete sentences why the following applicants would be approved or denied. So don't just think about it and then say approved and denied and think that that's the whole answer. Like, not giving you all the points for just saying yay or nay, 50-50 chance. And so you're not going to actually fill this in. You don't need to fill this in, but it's just to remind you of those 5 C's. And if you wanted to fill in notes for each person there, or think about in your own case, what kind of evidence do you have? I'm not asking people to submit to me their evidence of credit worthiness. I'm not taking any applications for loans. All right. It is good to think about, like, do I have these things before you're out asking? But I don't need to be privy to that information. And so each one of these, you've got the person. You might have to kind of dig around in things to see, like, okay, how much money do they have coming in? And remember that 20% is 20% of their annual income. So like I see this guy, it says $2,000 per month. So I'd want to take that. I could figure out my monthly one, do 10% of that, and think about what the payment would be. But $2,000 per month. So if I wanted to do my annual one, I would have to times that by 12. So that would be his annual income is $24,000. He doesn't have any other income. So $24,000, 20% of $24,000. We're at like $4,800. So this guy should not have more debt than $4,800. So when I see here, his outstanding debt is already about $7,000. Then I'm going to be, you know, pretty hesitant. It is a car loan. So again, people might justify things in different ways as far as, but whether you decide approve or deny, and then down here is where you would type your 3 reasons. And again, some of the reasons you can word them a little differently, basically still saying the same thing. Because there are going to be some things that like, whew, that's just, and then some of these like don't have very big income, but they also may not have very much in the way of debt. Some of them, their income is given for the whole year. Some is given for the month. So you have to kind of think about that. So there's a little behind the scene math that you could use that spreadsheet on Know the Limit. That might be helpful to kind of figure that out, but you don't have to. And I don't need exact, you know, you can give me exact dollar amounts, like they shouldn't be over this amount and they already have such and such. But I'm not asking for those specifics. So each one has a little different situation. And remember things like their assets, by the way, assets, that is your capital, right? So when it says total assets, when we're doing accounting, assets are the things we own. So that would go under the capital. Like, so if they have no assets, they don't have any capital. So if they have assets, that would mean they have capital. They may or may not have enough, but that's what the asset would, that's the C that the asset column would go into. And we're just seeing their applications. We're not seeing like a credit report. So on a credit report, we might see things like that for those debts, they're always late. We don't really have that information, okay? I probably should have changed some of these dates. I see some of these things, well, this one doesn't even have a start date for their income. So, oh, self-employed, that's why. Yep. So self-employed making jewelry and keychains, I might feel differently about than, I don't know that that's a solid $400 a month. But they also don't have a lot of debt. So, you know, but they also don't have any, they haven't saved any money apparently because no total assets.